I'd like to look at the flip side of that really quickly with Todd and Diana. As M2M companies or companies playing on the new players, the new smart grid field, and all the surrounding areas have come to you and pitched and have failed, what have you seen, what's turned you off? What have you seen that said, you know, I kind of get it, but I'm not putting money into it, come back in 5 years, or you're completely out of line, I'd never invest in that, or you have no idea how to deal with a company like that? What are some of the common mistakes you've seen, or some wild stories you can share with us about people who think that they've got the greatest technology in the world, but when it actually is put in front of the light of day, it, you know, withers away like a vampire in the UV radiation?
Well, we've only seen a couple smart grid deals at Catalyst, and really the big issue that we've seen is they just haven't matched the business models that we back. They've all been equipment sales, and they haven't had a compelling service proposition to really have a recurring revenue model. There's also been an element of venture risk, where we're a little later stage than traditional VC financings. We like to target companies where there's an established customer demand. We don't want to take any demand risk, so there's got to be adequate revenues there, and it's a little too early stage for us.
I'd say that to go on what you're saying, I think there's, in clean tech especially, there's this problem in perceptions of need versus demand. So we've got a lot of talk about, for instance, water infrastructure investments and, you know, water monitoring, and we've got to, you know where the water is going and how much is being leaked out of the system, and lots of, you know, similar type of talk in water as in smart grid. And the EPA and others have been talking about the need for, you know, $200 billion investment in upgrading our water infrastructure. And a lot of that would be driven by sensors and IT, et cetera. But when you look at the real demand for these technologies, who's spending, the municipalities, the investor-owned utilities, there's really very little. It's minimal. So we, time and time again, find this problem of companies coming in and pitching a technology or a service and saying the market really needs this. And we always come back to them and say, where's the demand? How much money is being spent annually by municipalities, by investor-owned utilities, by industrial customers on your water IT management technology or service, or your water infrastructure technology or service? What is, you know, and where are your customers? And so I think, you know, it comes to your point about where's the market? Is the market here today, or is it still a need and the demand will actually come in the next 10 to 15 years? So VCs always like to be ahead of the curve, but not so far ahead of the curve that we'll be waiting 15 years for those markets to really accelerate to the point where a customer, the company that we've invested in, will take off.
Can I have a comment? I think what you're seeing right now is one of the challenges that this market has had, and that is, if you read the long tail, I created another term called the shoulders opportunities. There's the big head, there's a long tail, but I think there's also shoulders opportunities. And if you think about it, what they've identified and what the VC community has been used to is that they need $1 billion market in order to make a 40% IRR over a 5-year period on an investment that might be somewhere between $15 and $30 million. The problem is that those are big head opportunities, and there aren't a whole lot of them within this marketplace. And so the question is how do you fund? And I'm looking in the audience trying to figure out whether people are shaking their heads thinking, how am I going to get funded? And the answer is that think about your market as a shoulders opportunity. And a shoulders opportunity, you're not going to go through conventional financing. You probably do angel financing, you get a cash flow model, you build a business, and it may not be an exit strategy where there's an IPO. There ain't an IPO market now anyway. Okay? It may or may not be a market, an opportunity, which the exit strategy is an acquisition. I mean, Numerex itself has done an acquisition about every year, you know, consistently. There's lots of companies like Numerex which will consistently do those kinds of acquisitions in areas that are strategic to their growth. And so there's great opportunities. There's a company that we've helped grow over the last year called GeoForce that has grown in providing a very niche product in the M2M space in the oil and gas industry for asset realization. Great opportunity, cash flowing business, growing, probably need some growth capital along the way. Could be they just grow it and cash flow it and have a nice lifestyle business for a long period of time. And a mentor of mine named Steve Halstead once said, "Hey Jeff, you better run a company like you're going to own it forever, because you might." And as an entrepreneur, that's what you need to think about relative from an investment strategy and an exit.
I'd like to kind of get a show of hands and get a little bit of assessment of the demographics in the room. How many people here are representative of companies that have thought of, are planning to, or have attained funding at any time in their histories? And who's looking for money right now? So the rest, everybody else is lying, right? Did anybody have any questions for the panelists before we get into the next set of questions? Yes, sir.
So, you know, as a entrepreneur who's raised money, as a venture capitalist who's invested in these kind of firms, including your person who replaced you at SensorLogic, I looked at him. I think M2M is a misnomer. It's really not about machine to machine. It's ultimately about efficiency of labor. In almost all these applications, there are human beings that are involved, and what you're trying to do is make them more efficient. And it seems to me the biggest growth area right now is in what would be called consumer M2M, which is, you know, the growth of things like your navigation devices that are getting connected. So I would ask everybody in the audience, I mean, are we really talking about M2M, or are we talking about ROI kind of opportunities? And are there enough of those heads, or is it all purely long tail?
Don't everybody grab the microphone at once.
Whoops, we dropped it. I think there's a wave of interest certainly in the sort of prosumer type marketplace taking place. It's this whole idea of embedded connectivity that's driving Kindles and PNDs and many other things that are going to happen over the next 3, 4, 5 years. I think they actually bring a very interesting set of additional problems to an investment grade pitch, because you've just added consumer and channels into the mix. You know, one of the positive things, if we do have such a thing as an M2M industry, if we do, is that they've typically got long staying power. For Todd, who's in the recurring revenue business, then they're saying, and by the way, they both represent rather unusual versions of venture capital organizations. The fact is that that's the healing component. You know, I'm going to be in business for 7, 10 years in a smart grid application. I'm in business for 3 or 4 months with a PND from that a consumer's got, potentially. Or I just don't like the ergonomics. I don't like a black case. I prefer a grey case. Whatever it happens to be. So I suspect that they're going to create some very interesting challenges. With regard to efficiency, I agree. We are in the efficiency business. It's not just human efficiency. I think it far too easily mischaracterizes it. Now, Jeff made a comment early on. Ultimately, I think that from an investment perspective, we're all looking at technologies that simply make things work, that frankly we can make money out of. You know, it's not technology for technology's sake. And if efficiency is the easy ROI model, we can do that. But we need to find out how we can actually segment and position it and demonstrate that you can take, even if it's not $1 billion market, as Jeff indicated earlier, you can take a dominant position in a carefully defined marketplace. So I think it's going to be interesting to see what happens. I think we're in a very peculiar investment environment now, obviously. We'll probably go back, to something a bit more normal in 2 or 3 years' time. But it's having that very clear understanding of how you own a marketplace, I think, that isn't being expressed by very many of the people that are coming forward.
Below, it's down on the street and it's dry.